Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah.
Hi, and welcome back to The Conscious Day Trader. I am Yanis, and we're trading live from a beautiful island named Bali. If you've never been, I would definitely recommend it. I am an ICT trader. I learned ICT trading from the 2022 Mentorship, which is free online. I've also had 2 years of trading with methods from the Scruffy Trader and my own, and I've developed something that I now trade on a daily basis. And 2023 has been really kind to me. I've had all green days so far, and today was another green day. Now, what we're going to start, as we always do, we're just going to jump on to our MT5 and our results. So what we're going to see is that we had $503. I normally aim for anything above ideally 500, but anything close to it, so 430 and upwards, that's a really good day. What you'll see is some repositioning of trades. Not too bad. We had a good day yesterday, so just three repositions of bad entries and three main trades. I closed the position when I was up 422, but then, as we're going to see in the detail of the chart, there was a very good setup that I wanted to take, and I took another position shorting the pound dollar for $91, so just 9 pips there. So what we're going to do is jump onto our trading view, and we're going to go straight to how we create bias. One of the biggest questions that everyone asks me. So how do I know if I'm going to be going long or short for the day? And that's something that you will find in detail on the 22 mentorship, especially on episode 18, where he breaks down exactly from start to finish how you create bias and the setups that we're looking for, which are fair value gaps, which are break of structure, draw towards a liquidity of buy side liquidity or short side liquidity. All these things come together, and eventually you have a plan that you can, when you open the screens, you don't have to spend a lot of time creating bias. For me, it takes around 10 to 15 minutes, and I know what I am for the day. Sometimes I'm wrong, but I still stick with my bias and get paid. And that's why what we're going to do now, even though I'm going to show the bias of yesterday, even if you were long, you will see that you would be able to make money. And that's key. Bias is not the golden zone of making money. Bias just gives you a bit of a preference in terms of looking for setups. Both longs and shorts, apart from an extreme occasion where the price is going to be trending the whole London kill zone in one direction, okay, can that happen? Yes, it can happen at 10% or maybe maximum 20%. And that's why my hit rate is so high, is because I can get out of trades when I've got my bias wrong. So let's start with the dollar index. Where do we start? We actually go on the previous daily high and the previous daily low. I've saved some settings here so it can become quite quick. I put a horizontal array there, which is called daily high, and add my daily low on my previous day. So let's check that. That's the Friday. Obviously we had the weekend, and I'll change that to my daily low. Then in between there, I want to get my equilibrium, which someone pointed out that I'm spelling it wrong, and he's absolutely right. I need to change that. If it's not, make sure you you correct it again and I'll get it right. Okay, so we have what's underneath the equilibrium. We've got discounted zone. What's discounted zone is where the price is trading at a discounted area from the previous day. What's the premium price is above equilibrium. So above this black line, premium price. So what you want to do when you're looking for setups for longs. When you're looking for longs, you want the price to come as further down as possible in the Asian market and potentially in the Judas move in the London Open, so you can get a better price going long. If you want to go short, you want the price to go above equilibrium, as close to the previous daily high, and even break a daily high, taking that liquidity on the upper levels to short the price either to the previous daily high, the red line, or to the equilibrium, or all the way down to daily low, depending on the setups. So now we've got our dollar index daily high, previous daily low. We're going to go onto the 4 hour just to see the picture. And as you can see, I've spotted out some sell side liquidity. Let's take the market out. Price gapped up. We traded this, if you remember, on Friday, I think. Yes, we traded from here down to that to fill in that gap. Price went up, created the previous daily high, which is on Friday, because we're looking at Monday session, and then traded all the way down, created this low. Now, why have I got sell side liquidity there? Before we look at that, I just want to quickly show you. You can see that the dollar index has been on a heavy buying condition. Okay, it's been strong. It came down from this move, created this low here, and we have that fair value gap there created on the downside, which has now come and tapped into. So this will be quite interesting for today to see what we're gonna deem as our bias for the day. But this is a 4 hour fair value gap on that move there. Now, we had a break of structure here, came and retest and tapped into not quite the fair value gap on the 4 hour, and then pushed higher, so you got to reject it. Where would that fair value be on that move? You can see a bit of a fair value gap there, which got tapped in between these lows here. If this move is going down and the dollar index is going to get weak because now it's filling this fair value gap and it's coming down, the next draw would be this fair value gap here. Why? Because there was buys that got filled, but it didn't give a lot of opportunity for a lot of people to take part. Buys opportunities for the market or waiting to get repositioned to go long. And this is quite an interesting area, because if we take this here, which is your buy side liquidity, let's take it from that candle there, take the magnet out, we can see that buy side liquidity got taken out there, and then it gapped above it and went higher to that fair value gap. So now we've taken out buy side liquidity and it's coming down. Now, if you are thinking of longing the pound, that's great, because now you've analyzed and you're thinking, okay, so this is going to come lower into that 4 hour fair value gap. So you can have a bias long. You wouldn't be wrong. However, I was short, and let's see if that would work out. Obviously it worked out because I showed you the profits of $500. And where did I see that? I went on to the 15-minute. Now we're going back into our trading mode. So when we're waking up, I checked this at 6 o'clock UK time. So now we're going to need the replay, and we're going to go to Monday at 6 a.m. So this is the information we had on the dollar index. What am I anticipating here? I am anticipating the dollar, even though, as we discussed, it's going to be going down, I anticipated that this break and filling this fair value gap here, it's not fair value actually, it's an actual gap, is going to have a retracement. So I put that as a blue box. So we opened, broke these highs, came back down, and took out the actual gap from the open from the weekend. Now, if I had done my analysis a little bit better, I would want to have waited for this price to come down to take out sell side liquidity below this intermediate swing low. Yes, and my entries are not perfect, and that's why I have to reposition. A better bias would have been breaking the previous daily low, taking out sell side liquidity, and then targeting what? Target 1 would be here, this previous daily high, previous swing high, and this fair value gap here. Where does that fair value gap meet? It meets exactly in the 50% of the equilibrium. So that would have been a nice target for me to take. However, I saw this and I was like, okay, we filled the gap. I think we're going to fail to break the previous daily high, and it's going to go higher. So as we discussed, I saw this opportunity here. filled the blue box. So I was long on the dollar index. And yes, I got a bad entry because in an ideal world, I would want to be getting in at this sell side liquidity. Now, there's two ways of thinking of this. You can either trade it into the sell side liquidity, which would give you a bias of a weak dollar, and that would give you a long pound. Or you can do what I did, take a long, you're thinking that the dollar is going to be going long, so you're going to be short in the pound dollar. You can see both are correct. It's just time, and like ICT says, time and price are very crucial. You can be long in the morning. If that's short, you're wrong, and the other way around in the afternoon. So let's see what happened. So we had this. That was what our game plan was from the dollar index. And then we're going to jump onto our trading. So we had our previous daily high and previous daily low. This is from Friday, and this was the arena. So what did we want to see? If we take the replay and go again at 6, that's when I started seeing this. I wanted to short the pound dollar. What did anything give me an indication of this going short? Yes, we had an actual gap here. That one there. And we broke the gap, and that was quite interesting for me. And we started my prediction or my analysis, because we're not actually trying to predict the market. We are analyzing, we're playing with probabilities. What is the probability of the price coming and breaking the previous daily high? Probably quite likely, because we're quite close. So the next draw to that would be to the previous daily high. Let's see what happened. It came down, and this is where it broke. So let's look at detail what happened. What we're going to do is going to go onto MT5, and we're going to look at our trades. So my worst trade that I had to deal with is 20353. Now, could I have been patient and not take that trade where that red line is, this one here? Yes. Why? Because we didn't have a convincing break below the... yes, we came and filled that blue gap and came down. Now broke the low and then came back up and broke above the 50% of this candle. So in reality, this wouldn't have been a very good entry. But I was looking at the dollar index. I was convinced on my bias. And this move that you're seeing here, and which would take a lot of people out if you were shorting, is coming from the dollar index seeking that green zone that we were talking about on the sell side liquidity. So if I had seen the sell side liquidity, I would have waited for that move, and on the dollar I would have been breaking the previous daily high. So it would have been a lot better for me to get in on a higher zone. Now, when you see this on the 5-minute, if you haven't done a higher time frame analysis, you will see this as a break of structure for the long side. So you'll be waiting for this fair value to be filled and go long. That's why it's very crucial to take your bias from a higher time frame. So that was my worst entry. Let's see where my best entry was. My best entry was at 120501. So as you can see, this is my worst entry and this is my best entry that paid the trade. How far apart are these? Yesterday was 22 pips. Let's see. Better, 15. Why do I say better? Because I don't want, that means that my conviction of the move on the day was really good. I was convinced that this is going to be coming down. And what did I need to see? So let's say I wanted to, these are the key things that you need to take out of this. How I understand ICT and how I use ICT concept of the 2022 doesn't mean that I copy it step by step, because I'm not ICT. I haven't had the same 2 years. Well, I have 2 years experience. He has, I don't know how many years. He has more than 20 for sure. So I take bits from ICT and put it into my trading and my management, how I manage trades. So if you're seeing something that doesn't align exactly with ICT, see that as a positive. because it's very rare that you'll find a trader doing exactly what ICT does and being successful. And yes, it sounds a bit contradictory, because you're saying, okay, so how do I learn ICT? Then I don't trade ICT. How do I do that? And that comes with experience, and you have to see what you understand from the ICT concept and how you can convert it into your trading and what you know already. And this is where, this is why it's really important to make sure that you have your analysis and you're confident with your trade and you can justify your entry. If you can justify your entry with logic and you have a plan to get out of a bad trade, then in my eyes, you're being a good trader. You have to be meticulous with your entries. You have to be meticulous with your pre-analysis of the market. You can't be just opening the chart and saying, I see this as a pattern and I'm going to go in, because then it's closer to gambling than it is to treating trading as a professional job. So what we're going to see is the break of structure below here. Okay. In my eyes, that was a convincing break of these lows here. In someone else's eyes who is looking at this, they will be like, it filled this fair value gap here, going long. Would you have been right and taken some pips out of that? You would have been taking 12 pips. However, if you hadn't killed that after 12 pips, you would have been hitting quite a lot of heat if you were going long, because the bias for the morning session was short. And that, let's put the fair value gap on that. So that would have been for the long side. What did I see? I saw that break of structure, came back up, now failed to break above convincingly. And this is where I was interested to get into this trade. Comes down. I didn't like that it didn't break lower, because with the break of structure, we want to see lower lows, lower lows, lower lows. It came back up, came back down, and then came back up and filled this fair value gap here. You see that? So from that bottom of the wick there to that one there, I got in at maybe 50% of that candle. It didn't, at the time, it didn't break the 50% of the candle, and I got in as my bet train. Came back up and now failed to break the highs, and then it came down all the way down to close my worst position. Now, in terms of management of this, right? Because this is my first entry, and my first entry I killed for $7. What does that mean? For that to kill at $7, I killed it after my trade was finished. Why? Because the price came back up, and that was my first that I had to deal one. So that was my anchor. Yes, a bit of it early. And as you can see, I've rebalanced 3 trades, $20 and another 2, and these let them run. Let them run is the 0499. So let's add the 0499. So I had my 2 positions that were the main, and this was against one. As this is coming down, break even would be around here. As it came down and I was getting paid, and I got closer and closer and closer to my target, when I got paid for $420, I killed that trade, and I was happy with it. And then what happened? The price came back up, and I thought I was done for the day. However, this was too good to pass. The price came back up and filled all these fair value gaps and gave a second opportunity to short the pound dollar. And I got in with one more trade. Now, because I'm already paid $422, I was only looking for 10 pips. So if I got in there, that would have been my exit. 10 pips roughly there. And obviously the price went down. It would have given me more, 20, so I would have had $600. Do I need to chase the money? No. Consistency above all. Be consistent and enjoy when the days are quick. So here I was started at 6 o'clock, done by 9:30. Well, my first trade was done by 8:30, so 2 hours of trading for $400. And another, I started seeing this at 9, killed it at 9:30. Another half an hour to get another 10 pips, 9 pips, which gave me the total of $503. And if we can see how we're doing on the month, we've still green days. I know this some people hate it that I have all green days. Instead of like getting inspired and trying to well, that's how I looked at other previous traders like the Scruffy Trader, ICT, and others that are doing similar trading. I saw that, okay, someone is trading with green days. How can I get close to that, rather than saying that's not realistic? Because in January until February, we've had all green days. That was the big 10K month. And we are bringing down those trades. So remember, in January, we're hitting 22 trades to get out of a bad trade, repositioning, and these 23s. This month, we've brought it down. So 10, worst one was 18 trades, repositioning. Only 2 trades, that is, remember? And I'm repositioning the bad trades. Yesterday we did 6 trades, so I'm super happy with that. 7, 4. That's where I want to be, between 6 and 10 trades, maybe, because I reposition. 3 to 4 repositions and let the others run with a better price. I hope that has made sense. This is Trade in Sync. If you want, because a lot of people ask for this, it is quite expensive. They've given me a link that I can share with you guys, and you can use it for, I think, 40%. If you have spare money and you want to use that, it's pretty easy to just press a button and you get all your journals in one place, and it looks nice like this. Don't have to worry about Excel and sheets like that. So I will put that in the description below this video, so make sure you go and check that out. It also gives a lot of information around overviews and other things that I haven't really looked into because I don't have time. It's just a quick way of seeing how many trades and how many profits I've had for the week. Like here, 800 last week because we were flying to Bali for these 3 days. And that's pretty much it of what I want to share from yesterday's trade. Super quick trade. I know a lot of people have a lot of questions, and I try to get back to everyone. If I am missing someone, your best bet is to comment below the video, because that's the easiest way for me to track Instagram and all that. Talking about Instagram, if you want to see a little bit about life in Bali and how my day trading career is looking down on the fields, rice fields actually, you can follow me on, let's go here, this one, theconscious.daytrader. And unfortunately there's 2 people that are fake accounts, and they're texting, they're messaging friends and family and saying that I'm giving them an opportunity to send me money and I can trade for it. Don't listen to that. I will never accept anyone's money, and I won't trade anyone's money. I trade for myself. And this YouTube now is becoming a bit of a daily thing, and I'm enjoying it and sharing the knowledge and the journey, which some of you are actually creating a bit of a community, and it's quite good to see. That being said, I will see you tomorrow for Tuesday's trade. Stay safe. Make sure you manage your risk and find what works for you. I don't have the answer for you, and ICT doesn't have the answer for you in terms of how he trades. But you can pick things that you align with from each person who's talking, like Scruffy Trader, myself, ICT, other people that you have in previous education or you're used to. You don't have to copy them exactly. You have to find what works for you. And okay, we've talked enough. I will see you tomorrow for another day of trading, and have a good afternoon and morning wherever you are in the world, and I'll catch you later.
I can't take no loss.